So some of you might know that debate is a distinctive characteristic of the Southeast Regional Credit Union School among the several credit unions that are around schools around the country. It actually follows a long history of debate here at UGA. If you have a chance to walk around the North Campus, you might have noticed two halls. One is called Demosthenian Hall, kind of a mouthful, and a Phi Kappa Hall. The Demosthenian Hall is from the Demosthenian Literary Society, which is primarily involved in debating and was founded in February 1803. So a long history, more than 200 years. Their hall is actually the fourth oldest building in the historic area of campus, and it's on the National Register of Historic Places. In 1820, there was kind of a schism in that group, and some of those who did not like how it was run went off and formed their own society called the Phi Kappa Literary Society. And since that time, though, they built a hall in 1826, and it's like the seventh oldest building on UGA's campus, so quite a long time. But since that schism, with the exception of just a few years during the War of Southern Independence, as it's stated on our historical marker up near the arch, these two societies have been debate rivals in the spring of every year. So today, or next spring, if you're interested in seeing real competitive collegiate debate, you might get a chance to witness that. So SRCUS is in great and historical company with our debate that we hold here. Now, the debate at SRCUS has several objectives. Among these are, it allows our students to explore all sides of a topical and controversial topic of the day, as you can see on our slide that we have listed here. It also provides an opportunity for our students to hone their skills in research, analysis, presentation, and somewhat negotiation, as they negotiate with you during the debate today to try to sway you in terms of what you should think on this topic. And finally, it also provides a demonstration of the skill and knowledge building that occurs at SRCUS. Our topic for the 2017 debate is larger credit unions should subsidize smaller credit unions. The debate format will happen as follows. We'll have a round of what we call constructive speeches. These will be 5 minutes each. The first affirmative side will be Hannah McGee. Her constructive speech will be then followed by a cross-examination. The first cross-examiner will be Emily Williams. Cross-examination at each time will be for 2 minutes. We'll follow this pattern with affirmative going first, then negative. We'll have our first negative after that with Lewis Smith. Our cross-examiner will be Mendy Schaffer. Our second affirmative speaker will be Don Milliken, with the cross-examiner of Emily Williams again. Our second negative will be Coy Stone, and our cross-examiner will be Mendy Schaffer. After this repetition or iteration of 2 constructive speeches each, followed by cross-examination, we'll take a 15-minute break. The audience is welcome to mingle a little bit, walk around the room, but after 15 minutes, that's basically time for the team to get ready with rebuttal speeches. The rebuttal speeches will have the negative side first for 5 minutes, Sharon Mitchell, and then that will be followed by the affirmative side with Jason Long. At that time, that will end the formal part of the debate. The judges for our debate are our first-year class, the class of 2019. So I charge you with paying close attention to the debate, but also set aside some of your preconceived perceptions about the topic. Okay? The idea is to think openly about this topic. Listen diligently, and when you go to vote, vote based on the ability of the respective teams to argue their case. Perhaps maybe they swayed you a little bit, so they were able to pull you to one side or the other. So with that, I invite Hannah to begin the 2017 Southeast Regional CUNA Management School Debate. After she has completed her presentation, We will progress through constructive speeches and cross-examination periods without interruption.
Good evening, first, second, and third year circus classes, participants, and everyone watching via live stream. I'm so happy to be here this evening to discuss such a passionate subject that we were founded on, our collaborative effort. I would like to begin by sharing a testimony provided by a fellow circus graduate. This particular person is a CEO of a $13 million credit union, and she was presented with a problem. Her SEG did not have room for her, and she was a CEO of a SEG-based credit union. She had no place to go. She had no facilities department, no security or IT, and no expertise as to how to solve this problem. Her alternative would have been to close her doors and not serve her 1,250 members. Or she could be absorbed by another financial institution. So how should she have proceeded? Credit unions are shrinking in numbers, and mostly it is smaller ones. And if we continue to lose credit unions, we will lose advocacy efforts as credit unions. Smaller credit unions are important, as many of us already know. Smaller credit unions serve a specific membership that not all credit unions can help. Many of us have our own story of how our credit union started out small with a shoe box or a cigar box, which is now part of your credit union's cooperative history, as you have written in your second year projects or will write this summer. So, should larger credit unions subsidize smaller credit unions? Yes, and we are already. Let me unpack this statement by defining two possibly ambiguous words, should and subsidize. The Plain Writing Act of 2010, which is U.S. federal law, has should as defined as to be encouraged to do something. So this is not to be confused with must, which is a requirement. Subsidize is defined within the context of our industry as to support, to contribute to invest in, and to sponsor. All of these words we're familiar with since we have such a collaborative business model. Helping others is in our DNA. So, should larger credit unions subsidize smaller credit unions? My answer is yes, because we are already, and I'd love to provide some examples. An example of providing staff and services to smaller credit unions is Peach State Federal Credit Union currently offers back office supports to several smaller credit unions. Another example is where credit unions share facility space. Guardian Credit Union has space on their MSR line for a Gold Coast Federal Credit Union MSR, and vice versa. We also subsidize each other by sharing expertise. We share policies and procedures via email. Second and third years, and some first years, have already benefited from this collaboration. And finally, what we've been thinking about, we do subsidize with funding. On a league level, and larger credit unions typically pay larger amounts for membership, so smaller credit unions can have access to the same fantastic services, knowledge, advocacy that the league offers. So, should larger credit unions subsidize smaller credit unions? My answer is yes. We have been for years. We already are, and we should continue to do so. You'll hear many reasons from our opponent as to why one would not want to support, contribute to, invest in, sponsor, or subsidize another credit union. But if your credit union was in need, bottom line, what would you want?
Hannah, you said that Peachtree Credit Union provides back office support to other credit unions. Do those credit unions pay for that support, or does Peachtree do it out of the kindness of their heart?
That's a fantastic question. Thank you for asking. They actually do pay for these services at an extremely lower rate that they would if they actually had these services in-house.
And can you tell me, in your example, the $13 million credit union, you said the SEG didn't have room for her. Do you mean physically in their building, or what do you mean specifically?
Exactly. She had to leave her building in a limited amount of time and actually find her own facility to operate out of. And that particular SEG had everything else for her, as in just all of the back office support.
Okay, so would you say that SEG didn't place value or importance on her credit union being in their building?
I would say that her members place value on the credit union. That's a great answer.
But not on her being in their building specifically. So what I would ask is that any new credit union that wants to start up is required to show their plan for ultimately becoming independent. And in her case, it sounds like she was dependent upon her SEG to provide her with a place to stay and didn't have a plan to be independent at some point. And that's evidenced by her having to leave quickly. So do you think that that is something that a larger credit union should have to step in and fix? Poor leadership or poor planning?
Again, I think that's a great question too, and it's really just in our business model to help these smaller credit unions and help their membership. I do agree, but I do believe that that it's in our DNA to help others.
Okay, thank you.
Good evening, first-year class. Thank you for coming out and participating in this process. The second and third years are glad to have you along, and we are happy to have you here. And oh, by the way, thank you for that thank you note that Tara posted. That was really nice, and we really did appreciate it. Everyone in our class liked that. And we've enjoyed getting to know you, starting with the buddy list and then moving on to the hospitality, getting to know you. And then next year, when it's just you guys, the first years and second years that are still here, and those third years are long gone, you know, we'll still be trying. But I don't want to influence you, so let's just get back to the point. The biggest thing about the debate that I learned, and maybe I'd never been involved in debates before, and the biggest thing that I learned is that I said, why does the third years get to both have the first word and the last word? And I said, that doesn't make any sense to me. The only way it made sense was when somebody explained, well, they have the affirmative statement. It's a call to action. They have the burden of proof to have a flawless argument. That's their job. They have the burden of proof to make sure that there's no flaws. So I want to go ahead and start unpacking what we think are some flaws in their arguments. I'll start with the first one. The statement up there, if you notice, says large credit unions should subsidize smaller credit unions. Should, as you just heard explanation, there's a definition with should. Now, it's going to sound like two different people talking, but I'm going to tell you what I read in the dictionary. So should implies a required mandate or expectation. The word should is the past tense of shall. Webster's dictionary contains words such as must, indicate a duty, expected. This is a stronger statement. And in talking to people in the debate world, they made a clear distinction as to what they thought should meant versus some other words. So could larger credit unions subsidize smaller credit unions? Yes. Should we? Shall we? Must we? No. The second point that I wanted to make relates to the 7 cooperative principles for credit unions. Principle number 4 describes credit unions as autonomous and independent. There are many smaller credit unions who are very successful at operating on a niche market and providing unique services to their members. I think it's frankly a little insulting to say that they need to be subsidized by some large credit union benefactor. Who's to say that they need change in how they operate or look for a handout from a larger credit union? Further, if a small credit union is not successful on their own, if we start throwing money to them, how is that going to solve anything? Small credit unions deserve the respect as independent, autonomous organizations to operate and take care of their members who love their small credit union. The last point we want to make is the word subsidize. Again, we'll go back to definitions. Webster's dictionary defines a subsidy as a grant of money. It shows synonyms as allotment, allocation, appropriation, all things pointing towards money. Large credit unions do not need to provide monetary payments to small credit unions. So don't be swayed by their arguments. Providing help and support is very different than subsidizing payments to credit unions. Credit unions are all about people helping people. We don't disagree with that. I think each one of you could look around and think of how you've been helped by a credit union in your days at working at a credit union. And not just large versus small. I've been helped by both large and small, and I'm sure you have too. So this affirmative is arguing in one direction, and it's arguing towards that monetary composition. We want to make sure that you recognize the difference between subsidizing and making payments and support and help, which we've all been for. Coy shared an example of remembering with Hurricane Matthew, people reaching out, opening up their branches when other branches were destroyed. And you know other examples that you've experienced yourself. But that is different from giving direct money from a large credit union to a small credit union. And support does not equal subsidies. So in conclusion, keep the autonomy of small credit unions and don't be misdirected by some hocus pocus on the definitions of words like should and subsidize. The third-year team may try to stretch the definitions of these words, much like the prosecution tried to stretch that glove over the hand of O.J. Simpson. If the definition does not fit, you must acquit. Thank you.
Thank you, Lewis. How are you today?
Good.
First, I want to ask you, do you believe that a written publication such as the dictionary overrides federal law?
Would the dictionary override federal law? I'm not exactly sure, because what you're doing is you're defining federal law in a definition there. I would say Webster's Dictionary does a pretty good job of explaining it, and most people accept it.
Well, actually, what I'm referring to is the fact that the 2010 article that was brought into law by the federal government that states that should is actually...
So you trust everything the government tells you? Okay. I was just checking because you're asking my opinion.
Would you agree that the shared branching network is a cooperative form to give smaller credit unions member access to branch services across the nation?
Absolutely. We're all in favor of support.
So when a credit union participates in shared branching, they're basically subsidizing the operations of the other participants by letting the resources, human capital, physical locations, and network be used for the good of members at another credit union. Is that correct?
At a price. It's not a gift of money. That's a business deal and transaction. So that's where we see the difference between support and working together versus a direct subsidization of a large credit union to a small credit.
So Lewis, you work at Bancorp, which is a $1.5 billion credit union. Is that correct?
That is correct.
They are a member of the co-op shared branch network.
That is correct.
So is it a fact then that Bancorp Credit Union is subsidizing all of these smaller credit unions, over 5,000 of them, branch locations, of these smaller credit unions through this network?
Actually, it's funny you should bring that up because we see the co-op network and the shared branch network as a huge asset for all credit unions, whether you're large or small. We don't have Saturday hours. Our members love that we participate in a shared branch network.
Thank you.
Thank you. Thank you.
Good evening. What a distinct honor it is to be a part of this important and timely topic tonight. To my first-year colleagues, how your vote today will be heard across our industry. The statement before you is larger credit unions should subsidize smaller credit unions. Unequivocally, we stand with the cooperative movement and say yes. Author Virginia Burden said, "Cooperation is the thorough conviction that nobody can get there unless everybody gets there." As Hannah articulated, ingrained in our DNA as credit unions is the passion for people helping people. That passion is one of the major factors that sets us apart from other areas of the financial industry. We believe the question is not should, because we do, but rather how, as credit unions, regardless of size, we contribute to one another.
I will present to you over the next 4 minutes 3 ways which demonstrate that the should is indeed the how. The first is a fiscal example in the form of the Stabilization Fund assessment, affectionately known to us as the assessment. For those who may not be familiar with the assessment, a brief history is this. In 2008, we witnessed the beginning of the Great Recession. The implosion of the mortgage market contributed to the massive decline in the market value of investment portfolios of 5 already troubled corporate credit unions. Now, a CCU is owned by credit unions that do business for them and with them. A corporate credit union provides Fed funds for short-term purposes and government-approved instruments for long-term purposes. As the market began to plummet, member credit unions of the corporate credit unions began withdrawing funds, causing a dangerous depletion of capital for the corporate credit unions. This led to a severe liquidity pressures. The implications of this sort of crisis became clear. Many credit unions were on the brink of failure. The NCUA stepped in to stabilize the market. From 2009 through 2013, solvent credit unions were assessed an annual fee to pay the NCUA Shared Insurance Fund. This assessment raised around $5 billion to save credit unions who had invested in those corporate credit unions. No tax dollars were used. This example is the epitome of contributing to other credit unions in the cooperative movement. We are credit unions committed to helping one another. A second example how credit unions support one another are through credit union service organizations, also known as CUSOs. CUSOs were first established in the mid-1980s. Individual CUSOs are owned and operated by one or more credit unions. They assist other credit unions with services and innovations while offering economies of scale. Business units such as compliance, human resources, mortgage service, and operations, just to name very few, are costly to operate. But these services and departments are necessary functions for our members, for our employees, and to help meet regulatory guidelines. A credit union service organization helps credit unions of all sizes to combine expertise while saving valuable resources that can be redirected to other services. We are credit unions in a cooperative. Finally, we want to close with the rest of the story of our CEO who is facing an issue and a crisis of her own. Because of her attendance at SRCUS and participation in her state league, as well as other credit union venues, she had personal contact with 20 of the 30 largest credit unions in the state of Georgia. She was able to seek guidance and expert advice regarding a large spectrum of items, from building management to marketing, IT, compliance, as well as operations and HR functions. Her colleagues at the other credit unions, they did not let her down. If someone felt they were not the expert in that particular field, they paired her with somebody who was. Because of the credit union movement's philosophy of cooperation, her members are the real beneficiaries. And isn't that what this industry is all about? These competitors poured into her life and organization. This is a direct example of a large credit union subsidizing a smaller credit union. We are committed, we are a cooperative, we are collaborative because we are credit unions.
Classmates are very enthusiastic. I like that. I think that what you were talking about was the Corporate Stabilization Fund, right?
That's correct.
And NCUA mandated that, correct?
Yes.
All right, so in the Corporate Stabilization Fund, just to boil that down into plain English, every credit union that was solvent had to contribute to that fund, and their contribution was proportionate to their asset size, and all credit unions benefited from that, not just small, which is not the argument on the screen. So,
well, and let me add that my credit union was one of the credit unions that did contribute to that fund. At first, it was a bitter pill for us to swallow. We were at that time a $1.5 billion credit union, but we also recognized it was more than just about the assessment. It was the very survival of the credit union movement And we were not excited, but we were proud that we could participate. And we are happy to say that now the NCUA and these smaller credit unions who are facing extinction, some of them and most of them are still here with us.
But it wasn't just the smaller credit unions that were facing extinction, and my point is that it wasn't larger credit unions contributing to smaller. It was everybody contributing for the good of our credit union movement.
Which makes our point exactly. We are specifically saying larger, but as a cooperative movement, it is the people of credit unions helping the people of credit unions, whether larger or small.
That the argument is that larger credit unions should subsidize smaller.
And we stand by that statement. Yes, we believe.
Second, members are the owners of your capital, and as such, they contribute to and democratically control the capital of the cooperative. So that benefits members in proportion to the transactions with the cooperative rather than on the capital invested. How do you convince your members in a subsidization, scenario as a large credit union? How do you convince them that you're going to give money to a small credit union?
Well, whenever we were going through this crisis, we actually, at our board meetings, we had a different leader at that time who was very passionate about the credit union movement. He's no longer with the credit union. But he did explain to us at the annual meeting that this was more than just about us giving an assessment. This was about the movement as a whole. This was about us helping other credit unions who may have made some mistakes, but we were a cooperative and we helped one another. We did not just say, too bad to be you, we're not going to help you with that.
Raise your hand if you have kids. There's a lot of us parents in the crowd. That's great. I have a 7-year-old little girl and a 4-year-old little boy, and I love them so much. And I'm sure many of you can agree, I cannot wait to get home to see them tomorrow as you would with your children. But with my love for these children they eat up 2 valuable assets of mine. They eat up my time and my energy, but they also eat up my costs. So with my energy and time, 80% of the time, I'm constantly trying to keep up. The remaining 20%, I left up in the hospitality suite over the week. Now, as far as costs, any parent would agree that children are a huge financial responsibility. In a way, we subsidize them until they are able to go out in the world on their own and financially support themselves. But with this financial cost of raising a child comes great power and influence that we as parents have over them. We influence how they act, what they believe in, what their values are, and who they associate themselves with. That's our right as a parent to guide them through life. As they grow older, they become less dependent on us, and we have less influence over their life as they become financially independent. Now, this can be said for any organization as well. For instance, did you know that credit unions in the United Kingdom are currently subsidized by banks? And at first it was a good cause. In the United Kingdom, the credit unions were receiving money from the banks so that they could increase their capital to serve the underserved, the people that the banks did not want as customers. Now, that's what we're in this industry for. We're people for helping people. It's entrenched in our DNA to serve the underserved. However, there were stipulations and conditions with these subsidies, such as with all subsidies throughout time. The banks in the United Kingdom prevent these credit unions from offering certain products or services to their members. Also, the banks in the United Kingdom prevent the credit unions from being able to target certain member segments. It's so bad that the credit unions in the United Kingdom are trying to break free from the golden handcuffs that these banks have them bound by through the form of subsidies so that they can regain their autonomy and their independence. Because isn't that the 4th principle of a cooperative? To be an organization of autonomy and independence? A better solution, instead of giving money to a smaller credit union to assist them, would be to continue to do what we are doing as a credit union movement as a whole, which is investing in our local chapters, investing in the credit union league by pulling together resources, tools, and information and education so that all credit unions, no matter if they're large credit unions or if they're small credit unions, could access this compounded accumulation of information if they choose to do so. There's that democratic choice in there for them. Because with any subsidy, there is going to be opportunity costs, especially for the institution giving the money. The NCUA defines a smaller credit union as a credit union with $100 million or less in assets, well, less than $100 million in assets. Anything over, by default, $100 million in assets is a larger credit union. So if you agree with the affirmative in this particular scenario, a credit union with $110 million in assets would have to give money to a credit union with $90 million in assets. So what that means is you're taking money out of the members' pockets from the credit union that's larger to give it to the credit unions that's smaller. This is money that could be used by the larger credit union to invest in technologies such as mobile deposits for the benefits of their membership. This is money that could be used by the larger credit union to invest in their communities and rebuilding their communities through charity. This could be money that these credit unions could use to invest in the credit union movement by giving it to their chapter and to their league instead of to one particular credit union. So the second-year class strongly agrees and believes that instituting a blanket-wide decree of this magnitude will have a negative impact on the momentum we have been building in the credit union movement. And we hope that you, the first year, agree with us. Thank you.
Thank you, Coy. You spent a lot of time giving an example of subsidies in the United Kingdom. However, we're not in the United Kingdom. What arguments or examples do you have that show negative effects of subsidies in the United States of America?
Well, it goes across all industries. I'm glad you asked that. I was trying to find something relevant to our industry because it's the financial services sector. In the United States, for instance, when the government subsidizes farmers, they're telling the farmers which
But that is not a credit union industry. Could you find an example of a credit union that the effects were negative?
In the credit union industry, we did talk with some of the advisors, and to not mention any credit unions by name, there was a negative impact where some credit unions prevented other credit unions from serving particular zip codes.
Well, let's move on to another topic better. The banking industry is powerful and are vigorously trying to get credit unions stripped of their tax-exempt status. Would you agree that retaining our tax-exempt status is critical to the viability of credit unions?
Yes.
Would you also agree that our tax-exempt status is a subsidy from the government, as banks are saying in their questions at this time?
Yes, but that's for all credit unions, large and small. Take advantage of that.
So the credit union industry lost 233 credit unions to closing and mergers in 2016. That continues. We will close 1,165 credit unions in the next 5 years. Does it then make sense that having fewer credit unions will weaken the overall credit union system?
Well, if you're taking money from the larger credit unions to give to the smaller credit unions, that's going to have a negative impact of the membership of the larger credit unions, and the larger credit unions would end up having to raise some fees, prices, and then at that point, if they're charging more fees to their members might not see them any different than, say, a bank, and that could overall have a negative impact.
So is it in the interest of the credit union movement to have larger credit unions help smaller credit unions to stay viable?
Yes, it's in interest, not from a financial standpoint. Throwing money is treating a symptom, not...
We will now have a 15-minute break so that the two teams can prepare their rebuttal speeches.
Good afternoon. Welcome back from your 15-minute break. Did you take that time and get your dinner plans finalized? Excellent. On behalf of the second-year class and the entire 2017 debate team, I want to thank you for listening to our arguments. Before you're released for the evening, you do have one more task, but it is a fun one. After the closing arguments you're about to hear, you'll decide which side had the better argument and who presented the more compelling case. And then the power transfers over to you, and you'll vote. First, second year. Let's review this statement. Larger credit unions should subsidize smaller credit unions. As Lewis defined for us, subsidize means that an entity gives money, and should, in this instance, means whether they like it or not. Don't get confused with semantics. The law doesn't define the words. And let's not confuse subsidize with support. As Lewis mentioned, by definition, requiring larger credit unions to subsidize smaller credit unions, we're going against credit union philosophy. We're violating Principle 4 of the 7 cooperative principles for credit unions. You just studied that this afternoon with Jeff Harden, or this morning. Principle 4 is that credit unions are autonomous and independent. And we're also violating Principle 2 of the membership's democratic process to decide where those funds go. However, autonomous and independent and democratic has never meant isolated. In credit unions, we help and support our members and each other. We are defined by this standard, and the resources are already in place. We have our leagues, our relationships with each other, our shared resources, and other avenues of assistance, which are already working to support each other, small and large credit unions alike. Coy reminded us that the one who gives the money makes the rules. And in the examples that the third years gave us, what they forgot to mention was that those smaller credit unions had to pay for all those privileges that they're calling subsidy. He described, Coy did, the credit unions in the United Kingdom that were subsidized by banks, which at first, in theory, seemed like the most wonderful plan. But now those credit unions are feeling the pinch of those golden handcuffs he described, and they're restricted in the services they can provide their members, in the products that they offer, and even the memberships that they can bring in. Coy also asked you if you had children. He discussed the weight of the financial burden, which is why his last 20% went up to the hospitality room. But remember, he had children by autonomous and mostly independent choice. I do imagine his wife had some say in that. But let me ask you this. Of those of you who had children, and those of you who didn't, how many of you want to give me money to raise mine, to subsidize my children? How many of you would like to give me your money to subsidize Coy, Lewis's, and Emily's? Of course you don't. But I have no doubt that you would let me into your home to borrow your computer and your internet to help my children with their schoolwork. I know from personal experience just this week that you'd give me information on the neighborhood watch. Just this week, we've all been discussing those criminals from the Georgia Correctional Facility that killed those guards. We knew where they were. We knew the minute they were caught. We even knew how close they got to this organization because we shared that information with each other. And I'm pretty sure most of you would probably let me charge my phone or laptop at your house. Because that's who we are. We're people who help and support each other. Throwing money at a problem has never fixed anything. If throwing money at a problem worked, I'd be a size 2. Just telling you. So as I said before, the third years could not provide an example of where the money to subsidize was actually handled and to progress. All those people who participated in those had to actually pay in, so it wasn't a full subsidization. It was on the third year to prove their argument that we should make this enormous change in our industry, and they didn't. Thank you.
Good evening, ladies and gentlemen. First, second, and third year students all join together for a common cause. We journey to Athens each year to support one another, share our resources, and form a bond which allows us to better serve our credit unions and, more importantly, give back to our members. Henry Ford once said, "Coming together is a beginning, staying together is progress, and working together is success." Today, we've gathered together to debate the topic, should larger credit unions subsidize smaller credit unions? We've all heard the arguments from both opposed and for on the debate topic. The mere fact that there are different definitions of the word subsidy indicates a position of subjectivity, meaning subsidy is much more than financial support in the credit union industry, confirmed by our second-year colleagues. As mentioned by Coy, if we don't subsidize our children once they are grown, then what are we saying? Are they better off on their own without parental guidance? And what do we expect to leave our children once we die? We have become a nation of Walmarts, chain restaurants, and national retailers. Fading fast are the neighborhood grocery stores, bike shops, and hardware stores. Many of you in the audience have been facing the challenges of rising costs, declining loan volume, and shrinking margins that have affected our industry for the past 10 years. This industry was formed during the Depression on 3 simple words: people helping people. Should larger credit unions subsidize smaller credit unions? Absolutely. It's ingrained in our DNA to help one another. We are a cooperative, and we live by the 7 cooperative principles. The 6th principle is cooperation amongst cooperatives. Cooperatives serve their members most effectively and strengthen the cooperative movement by working together, locally, nationally, regionally, and internationally. In order to continue our mission, credit unions must work together to reduce operating costs and leverage our buying power to ensure the survival of the credit union industry. Credit unions are people helping people. And if credit unions are indeed owned by their members, shouldn't credit unions help credit unions? If all we are doing is looking for a fatter bottom line and waiting our brother and sister credit union to fail so we can come scoop them up, have we become something different? Maybe a bank? If smaller institutions fail because of lack of industry support, the members will be the one who suffer. Taxpayers subsidize credit unions. Congress put the income tax exemption for credit unions directly in the Federal Credit Union Act because we serve people of modest means. If the government will afford us this subsidy, shouldn't larger credit unions subsidize smaller credit unions? The answer is yes. A smaller credit union embodies the modest means cooperative. I would like to share one final example of a subsidy. With funds left over in their budget, the SRCUS class of 2016 decided to start the Student Scholarship Fund. The scholarship was established with the goal of helping smaller credit unions benefit from the opportunities offered through our school. Chances are the winner of that scholarship would not be here with us today if the 2 classes had not reached out to subsidize other credit union people. In fact, there are a lot of us here today as a result of assistance from an outside source. If anyone is here at SRCUS as a result of a scholarship extended to you, money from your league, chapter, or other groups within your state, from any of our 3 classes, I invite you to please stand up and remain standing. Imagine if you didn't have these members in your class. Imagine losing all of the insight they brought to all of your conversations, presentations, and class discussions. Let me ask you all to think about this SRCUS program. What if we lost this amount of people because we simply chose not to help? Thank you. You may be seated. I would like to leave you with a quote from Charles Darwin. It is a long history of mankind that those who learn to collaborate and improvise must effectively have prevailed. Credit unions prevail because we are committed to one another. We are a cooperative. We are credit unions. We are all people helping people.